Live again for another weekly episode. Today is just, it feels like the nail in the coffin. For the last 4 weeks, we have seen down day, down day, down day, down day after down day after down day. And I'm like, okay, it can't get worse, you know? It can't get worse. It can't get worse. It can't get worse. And then it gets worse. Every single day, it gets worse. Oh, today is a bad one. And if you guys are here with me and you're holding in through the NASDAQ's down 28%, almost 30% from where it was, which is fine if you invested, 2, 3, 4, 5 years ago. I unfortunately sold a large portion of my real estate portfolio. As you guys know, in January, I had a whole bunch of closings and I dumped millions into the NASDAQ effectively, and all of Facebook, Amazon, Netflix. You pick a stock, I invested in it. MicroStrategy, tons of Bitcoin, Ethereum, all of that exposure. And Ethereum's down 30% this week alone, just this week. It's bad. There's blood in the streets. Luna, I wasn't really an investor in that, but I have friends who are invested in that and watched you go to near zero today, into the pennies. Bitcoin down, like testing well under 30,000 a token now. Crazy large companies like PayPal, Facebook, Amazon, Google down 20, 30, 40%. And it could get a lot worse. Today, on Thursday, I thought the market turned. After the Fed speech, I'm like, oh, they're not going to cut as much. I'll be honest, I doubled down. I'm like, things are going to come back, and I doubled down. And Friday, the 3% gain we had, it was evaporated in the morning immediately. And then we just tanked like another 10% down in the stocks, in my collection of stocks that I have. I sold almost all of my oil sector and other stuff to cover the fact that tech is down so much. A lot of that stuff has been holding, so I've been doing okay in that side of my portfolio. But I sold that today. I dumped half of that portfolio. So I'm 50% cash in my dividend portfolio, which means I won't be collecting a lot of dividends. I'm just sitting on cash to cover margin that's now happening on my tech portfolio. We talk about people put in here, no more tech stocks. Well, the NASDAQ 2000 is down 27% year to date. The S&P 500 from all-time highs is getting close to 20% drop. That's significant. The only time you lose in the 4% safe withdrawal rate in the early retirement formula that we use, the only time that you lose is if you get in at the top. Usually you dollar cost average. And if you've been dollar cost averaging and watching my channel over the last couple of years and buying, over a long period of time, you'd be just fine. I got wiped out last summer on a short trade. I recovered by November, and then I sold most of my real estate portfolio in January and deployed all of that net worth into equities. The timing of it could not have been worse because I took properties that I sold in September that finally closed in January. I missed the hype. The market hyped up until February, and their 20% real estate jumped up. So I missed that whole 20% jump. I wasn't trying to time the market. I just sold them. And it's brutal. I took all that money and I put it basically in indexes. Again, I'll be fine, right? Like I'm holding shares in Facebook, Amazon, PayPal. These are names that will Google. These are names that'll be just fine. Facebook's going to be fine. They own WhatsApp, Instagram, Facebook. Collectively, they're a cash printing machine, but valuations are coming way down. I have a lot of option contracts that I didn't think, like I have stuff sold. I was doing some like safe, plays on margin. I was like, oh, I'll just insure the index like a 25% drop. I didn't think it could drop 25%. It's dropped 25%. And so now I have to go buy the index at 25% on margin. You do not want to be buying on margin in a recession until we're at the bottom. Statistically speaking, the only time the 4% safe withdrawal rate fails is when you retire at the top. And effectively, I sold my real estate portfolio, got into equities at the top. So I deployed a few $1 million at the top, and the NASDAQ 2000 is down from all-time highs 27%. I have done just as poorly. My MicroStrategy shares, geez, they're pretty much just like a Bitcoin stand-in, public equities Bitcoin stand-in, and they're trading at half of their market value of their Bitcoin. Like you could literally buy shares of MicroStrategy right now and effectively as a shareholder own their business, but also their Bitcoin holdings. And Michael Saylor's Bitcoin holding, within MicroStrategy is trading at way below market value. The market is just so bearish right now. We need some good fucking news. Interest rates way up, right? They're going to continue to hike, hike, hike. Inflation came out today, 8.3%. We were hoping that all of these rate hikes, and not only just the rate hikes, but like the fear that they're going to increase rates several times more, should be enough to cool things down. It should depress businesses enough that we end up in a situation where effectively we should see demand drop and then prices will have to fall, right? Businesses are suffering. If you're in real estate right now, if you're in any business and your line of credit interest is just doubled, unless you're a strong cash business, you're negatively affected. Your customers won't all be cash customers. So it's going to affect everyone. It's going to create a bit of a recession. I hope the whole market tanks 10%. Well, it's already tanked and more than 10%, right? It depends on which indexes you're following. Commodities have done all right. Oil's spiking, so if that's the majority of your holdings, then you're fine. But if you're like me and like I believe heavily in cryptocurrency and technology and Web 3.0 as the future, and I know 5 or 10 years from now I'll be fine, I'm going to continue holding my shares. I will not drop the bag. I've thought about selling. You know what I thought about doing though? I thought about selling all of my Bitcoin holdings and my altcoins that I hold, collecting a tax write-off personally to offset my real estate that I sold earlier this year, and then effectively re-exposing myself to that crypto 30 days later inside of my corp, where I have all these losses that I can then use to basically get a tax-free gain when, say, Bitcoin comes back, when, um, I have no Luna holdings at all. Good to hear that it's going to zero. I mean, I think it'll probably stick around. I don't think it'll go right to zero, but yeah, I mean, it's high risk. A lot of these altcoins are very high risk. Um, NFTs too, I mean, are just tanking right now, right? It's just, it's painful for a lot of people. I know a lot of entrepreneurs that are down 7 figures. I myself am down 7 figures right now. It's painful to watch. Like if you have a portfolio like I do, a 25% swing is huge. And what's worse is that I started to buy the dip on margin on some of the days where I thought, I think, oh, it might be recovering. Like last Wednesday when we heard the Fed talk, I'm like, you know what? The economy's strong. The job numbers are good. You know, there are, increases in wage inflation. Okay. They're not going to crank it as hard as we had thought. There will be a turn. And at that point, when the Fed says, hey, we've got inflation under control, we see those numbers, and they start to ease up on rates, right? They go from being hawkish to being dove. The market will turn like that. We'll see 20, 30% growth. So those people like me who are going to hold through this, it will come back. There will be a season for crypto, for Web 3.0, for tech. I mean, Google owns the world. Google, Facebook, Amazon, like those are companies that are solid, long term. They're having bad earnings. I get it. People are beating up on some of their forecasts, but they are cash generating machines and they're the future. So there's definitely still opportunity here. As markets continue to absorb this fear in the market, the marketing companies pick up on it, and the news outlets run the fear porn, we will see prices probably drop further. I don't know. I don't know how far we could. I mean, we could go 50% drop. Hard to say how far we could go. No one knows. But what we do know is that 10 years from now, most of these companies, the index itself will still be here. If you buy the S&P 500 right now, 5, 10 years from now, this is a huge discount. It may not be the bottom, but it's trading at a significant discount. So I think that, someone asked, what's your top holdings? Bitcoin, all the way. Number one holding is Bitcoin, followed by ETH, followed by Solana or HBAR or Matic. One of those would be the next one on the third largest holding that I currently have. But Bitcoin I'm most bullish on, and it's my largest position by far. I'm thinking about dumping it though and just buying like MicroStrategy. I don't know. It's yeah, it's a painful time. I feel your pain too, Adam. see the comments here. It's time to buy index funds again. No more tech stocks. You know what? Actually, this is the time to start looking at tech stocks. Companies like SoFi and Upstart Financial and Facebook and PayPal and a lot of these techie growth names. There's going to be a really good opportunity here for people to get in on these businesses that are going to be fine 5 years from now, right? Like, there's just so much opportunity in the whole of the space. A lot of the big names are down 30, 40, 50, 60, 70, 80%. Some, like MicroStrategy, is down 80% from all-time highs. PayPal, same thing. Facebook down like 50%. Netflix down. Just everything is just hammered. And they're not going to be gone. Like, Amazon will continue to dominate in the cloud infrastructure as a service and cloud storage space. They also have a huge consumer piece too. And they have Amazon Prime, which competes with Netflix. They're just a huge mammoth of a company. Google, the same thing. They store a lot of their data on Amazon servers, but Amazon to me is a tech play. I know they do consumer shit too, but like that's not even the primary of their business. Anyway, there's just a lot of these businesses will be fine. They're cash machines. There's tons of potential. Hold, hold, hold. And if you have cash to deploy, start dollar cost averaging now. You're not going to go wrong buying. Continue to buy. Don't buy on margin and don't risk a margin call. We don't know how far things are going up. I am going to have to cut some positions to stay off margin. I'm waiting for a bounce day to do that. I know it's timing the market, but like we have to make hard decisions to cut and be able to survive these turbulent, volatile times. The VIX is at all-time highs for the year and for the last 6 months now, I think. So just crazy times. Again, I think there will be a bounce. I'm waiting for that opportunity. It hasn't hit real estate as hard yet. I will likely have to liquidate a few more of my properties, my sixplex being one of them, because I own it fully in cash, because that would give me well over $1 million to deploy. And these are opportunities here where I think, I could be wrong. We could drop another 25%, but long term, these are opportunities where we're getting to buy at discounts, and this is the time we want to look to be buying. So yeah, that's where we're at right now. It's painful. It is fucking hella painful right now, but we will get through this, and we'll be better for it. Remember, Bitcoin got down to a little over $5,000 a token in 2020, and then ripped to like 50,000 at 10x. It has a history of doing those kinds of things, right? Okay. Aaron says, apes are strong together. I feel your pain on a percentage level. Stay diligent. Yeah, it's painful. It hurts to lose that kind of money. It would, I'd have to work at doing multifamily deals, undervalue and burying them and turning them around for like a year or more to earn back what I've lost. Or, because it's not going to affect my lifestyle anyway, if I can continue to hold and weather through this storm, a few years from now, I'll be thankful I didn't sell at the bottom. So Mike says, bought my first options trade in over 2 months. Apple dropped 5%. You're not alone. Yeah, I didn't think Apple would drop below 150. That was a really bearish line that was kind of crossed in the sand. But you know what? It's just, these are crazy times we're in right now. And valuations are going to be a little wonky. That doesn't mean that Apple isn't still delivering a ton of value. They aren't still a cash machine. Doesn't mean that, Google isn't still a market dominator. Doesn't mean that Amazon, again, isn't still a market dominator. 5 years from now, we'll look back on these prices and say, why don't we buy more, right? Maybe things drop another 20%. Maybe, who knows? Maybe they could recover. We start recovering next week. Get some bullish news. Inflation is under control. Who knows, right? No one has a crystal ball. We don't know. What we know right now is that there's a 27% drop in tech, in some of the just purely tech, 40 and 50% drop right now. Growth in tech, 50% drop. There's huge value there. Maybe it was overvalued before. Maybe. I think that's probably the case. But we're getting to a point where some of these growth stocks are trading at PE ratios, price to earnings, that are more like value stocks. Like they're trading more like the PE ratio of Coca-Cola, but they're a tech growth company. And it's like, whoa, there's opportunity here. As Facebook, it's like a 12 PE ratio, right? I don't know what it's trading at today, but at the lows, that's interesting to me when we get back into a lower interest rate environment, because let's remember, like, all these nations are greatly indebted, right? As interest rates rise, it crushes the balance sheet of the government as well. So once they get inflation under control, you know that they're going to be cranking and printing. It's just in their nature to want to do that. They want to devalue the currency. That's how they print themselves out of debt, and they continue to raise basically tax revenue from all of us. As they inflate our assets, they get to then tax those assets that they artificially inflated. Even if there's no real buying power change, they get to tax the value they created. So they get to take a portion of our assets. So inflation is actually good for the government if they can keep it at like 3%. So they want to just crank it down ideally. It is a bit out of control. They need to rein it in. Raising interest rates will do that. But unfortunately, it will also crash valuations, and therefore real estate and the stock market are highly prone to that sensitivity. We have to hold through these times. I wished I had stayed all in cash and I could deploy it now as opposed to when I deployed it in January. My timing could not have been worse, but I didn't have a crystal ball. I had a bunch of cash sitting around. I had millions of dollars. I'm like, okay, I'm going to put it in the market, buy the indexes and specific stocks that I liked. That, obviously, from a timing perspective, was the worst. The only time people fail in early retirement is if they retire at the top. If they fully invest their net worth at the top and they retire based on that number at that valuation at the top of the market. And I think probably start of January was that top. Yeah, there you go. So some of this Coca-Cola is up 6% to date. People are flocking to value stocks right now. They feel like they're safer. And I honestly think value might be a little bit overstated now. I think tech's on sale, and there's probably some value in tech, but it could get beat up more. We can't predict where the right entry point is. None of us are perfect at that. It is on sale compared to where it was before. So if you liked Facebook in January, you liked their business model, if you liked Amazon, if you liked Google, if you liked PayPal, if you liked a lot of these names, MicroStrategy and their Bitcoin holdings, if you liked Michael Saylor and what he was about, and you liked him at $650 a share, damn well you love him at $160 a share. Like if you loved Facebook at $350 a share, you hella love it at like $175, right? You should love it more. The thing is, people get fearful, and this is the time to be buying. If you have cash right now, buy. If you can refinance properties and take that equity out and put it into the market slowly, dollar cost average in on those big down red days, this is the time to be doing it. This is the time where you'll get the greatest, historically speaking, you should be investing heavily in down bear markets like we're in right now, where the FUD, the fear, uncertainty, and doubt is at its highest. I don't know if we're at that point, but we're definitely in it right now. We are in a recession. It is happening. We're in a bear market right now. It's happening, especially in the United States in tech, in certain sectors more than others, but in general, the whole market, the S&P 500 is considerably down year to date and from all-time highs. So we are in a recession. Yeah, I mean, even crypto is tanking, and some people are saying foul play, and they're saying that there's some manipulation going on, and there probably is. There's no regulation in crypto. Whales can just dump if they want to, and the government can print fiat and then suppress the price of, say, gold, silver, or crypto if they want to. So just hold. There'll be a time, there'll be a season, there'll be a run. Now isn't the time to be liquidating unless you are in margin or you're having risk of being not able to hold through a recession. So do a sensitivity analysis on your portfolio and say, hey, if prices drop 25%, am I okay? In real estate, no one ever calls our mortgages, so we don't care. If you own cash flow positive real estate, sensitivity analysis is, am I cash flow positive? If rents drop 10% and hydro costs go up 10%, property taxes go up 20%, these are going to happen with the inflation numbers we've seen. Property taxes are coming up. Damn right, get ready. Property taxes are coming up, hydro's coming up, gas costs coming up. Probably a little bit of everything on your operating costs as a real estate owner will rise. Your rents will be fixed. If anything, they might drop because of a recession. So just remember to run your numbers, and with a sensitivity analysis, if you're positive cash flow, hold. Now isn't a great time to sell your real estate portfolio unless you really need the cash or you think you can deploy that cash somewhere else and get a better return. I can see the arguments for like selling your real estate portfolio now before things potentially dip further, before we go through this rough recession, and having cash at a time when you can get into the stock market at a 40 or 50% discount off of all-time highs. So yeah, it's obviously something that I think that we should all be cognizant of in these times. And having cash in these times is king. So if you can refinance your properties, if you're going to keep them, refinance them now. Interest rates are still low relative to where they could be and where they may be going, where the market's pricing that they will be going. So rates are still low. You should utilize the fact that rates are low and borrow as much as you can, fix debt that won't be called. On the margin side, be very, very careful right now. If you have debt tied to your equities, be very careful. The markets are very volatile. We have days of plus 3%, minus 3% in one day. That kind of volatility is just, as an options trader, you could potentially just create spread trades or strangle trades and make a lot of money in these times. So that's an option too. Remembering that you don't necessarily want to risk losing everything. And with margin, you can lose everything. If you've borrowed against your stock portfolio, say 40% of the value of it, and your stock, or 50% of the value of it, and your stocks fall 30, 40%, and you get a margin call, they liquidate everything. Your equity is gone. If you had $2 million in there and you got $4 million in shares or whatever, and the shares tank in value, they will liquidate all of your shares to cover the debt, and they'll close your account. That's it, done. So you have to be very, very careful. Yeah. So I'm waiting for a bounce to get out. I'm going to move to more cash. Again, I'm not confident in the markets, and where I'm at right now, I have more than, if I liquidated everything today, I still have way more wealth than I need to support my lifestyle. I'm still a really wealthy man, so I'm not at the point now where I want to be on margin. So I'm delevering. The next bounce, I continue to delever. It's painful to cut losses. Like my Amazon shares are down like 150 grand right now, and to cut half that position to free up, cash, it's a hard call to make. It's a hard call to make. I'll answer that question in a second. Just saw it pop up with the Bahamas. The short answer is not now. The long answer is yes. You got to remember though, guys, I can tax loss harvest all this. I could roll all these contracts, create losses in this year, get back into the market, and theoretically have a corp now with a huge 7-figure loss where I can earn income in Canada. I can start a business or do whatever, and I can earn that income tax free. So now the urgency to move to the Bahamas is not as strong. Getting ready to file my exit return on a down market though, pretty interesting. These losses can be very, what's the word I want to use? Like it's a very lucrative opportunity, right? So definitely something to think about though through these times. I'll address that in a bit more in a second here. Someone says, blood in the streets, we still love you, short it up. Yeah, I mean, you could short the market. If anything, you should have hedges on all your positions. You could, instead of selling your positions, you could effectively hedge and sell calls on them deep in the money. And if the market drops deeper, then if you're deep enough, you'd get money for nothing effectively, or your shares get called away. It's the same as selling your shares effectively. William says, please be careful. The Schiller PE is still quite high. There may be more inflationary issues. Diesel and wheat may still jump higher. Very true. This is true. If interest rates continue to climb, the PE ratios look less and less attractive. Debt markets, there's debt opportunities that become more attractive. Higher interest rates make the valuations less and less attractive. The question is, do you believe that we will get back to, 2 and 3% interest rates? That's, will we bounce back next year? I think we'll get inflation under control. I think the government's going to readjust how they value inflation and use tech and technology to make things seem more affordable than they are, as they've always done. And they will make it, inflation has been like double digits for like the last 10 years in real estate and all the areas that actually count for a person's budget. So, I mean, if we can say inflation is 3%, but like, fuck, let's be honest here. Yeah. I don't know. Okay, let's see. Next question was, Mike, do you short it all? So the challenge with shorting is you can be wrong. And I've been wrong. I shorted Newegg from $22 a share up to $70 a share. They closed my position out on me. I was margin called last year. And I recovered from that short. I lost $1.4 million in one day. And I recovered from that. I'm at about the same level right now in my stock portfolio. Stocks and crypto together, I'm definitely more than that. But I'm around that point now. And I recovered from that in 4 months. So I could use the options wheel, and if we got into a flat or a rising market, to ride it out. The problem with shorting is that long term, the market goes up, right? So if you're shorting, long term, you will lose. It's a short term play. I would rather be long, and if I'm wrong, I get to own the equity, and eventually I'm right. Like if you hold Amazon shares long enough, they'll reach $2,500 a share again, guaranteed. But if you're short Amazon to say $2,000 a share, it may hit $2,000 a share, but if your timing's off, you could get burned with shorting big time. So what I think is a better way would be to sell calls on all your portfolio equity positions that are relatively deep in the money or close to break even. Whatever you're comfortable with. If you were going to sell the shares anyway at current price, maybe you sell calls at current price on a big green day, on a big up day. And then what happens on the next big down day we get, those calls will be 70% realized. And that's basically, you can harvest that profit on the down days. And it's just psychologically, it feels so good to harvest profit on down days. So that's something nice. You could sell calls on your whole portfolio. And you get faded decay too. So over time, even if the price stayed the same, it went up, went down, and end up at the same point, you win on the decay of that insurance contract. So selling calls, if you're selling calls covered on the equity positions you have, you're effectively shorting, but you're covering because you own the shares. So if the stocks do rip up, you're not going to get screwed. If you're shorting and we have a bounce like we had on last Wednesday, there was a 3% bounce after the Fed spoke. I believe it was last Wednesday. Yeah. There's a 3% bounce. Thursday morning, it went down 3% right off and canceled everything out. It was insane. Markets shouldn't move like that. But anyway, that bounce, if you're shorting, could cost you a margin call. It could get to the point where your contracts could be expiring on your short and the timing's just off and we go through a bit of a bounce, dead cat bounce, or a bit of a bull run. And so it's hard to time the market. So that's the problem with shorting. But I think a better strategy is having those equity positions, maybe 40% cash right now, 60% equities, and then covering all those equity positions and deploying your cash on those down days and then covering those with sold calls. A lot of people like to buy puts. I'd rather sell puts than buy puts. When you buy puts, over time, those puts, they lose value. They decay. So the longer you have the contract, the less money you have. So I don't like to buy puts, but people do buy puts to ensure their portfolio. As a short-term hedging strategy, it can be fairly effective, especially if you're on margin. I should take a spoonful of my own medicine. I should hedge my portfolio. I'm like, oh, I can't sell calls on the index because it's just too low right now. It's not paying enough. If I had just been selling calls on my entire equity portfolio right now, I would have had, 400,000 less in losses right now. That would have been money that I could have been harvesting as the market moved down. You've got a protection on your equity position. So it does cap your upside, but who cares? The more important thing is not to lose money. Remember, 25% drop means you need a 50% gain to come back. I'll say that again. If you drop, say 30%, you need 60% to come back, thereabouts. The more you lose, the more you need to come back, right? If it drops, 50%, you need 100% to come back. So if you had $100 a share and it drops to $50 a share, for it to get just from 50 back to 100, you need the stock to rise 100%, where it only dropped 50%. So that's a lot. It's hard to come back from losses. So make sure you protect yourself against losses in these times. And I should practice more of what I preach. It's easier to look at a portfolio than when you're looking at your own. It's hard to make those calls. But my Bitcoin is only 1 right now. Okay, so you're just holding Bitcoin. Good for you, crypto. It's painful, so hang in there. I also feel the pain. Respect for this public, open discussion. Thanks, Radical Personal Finance. It's fucking painful, but I'm hoping that by sharing, people can learn something from me. Don't double down like I did last week. I thought the market was going to turn up. I'm like, I think we're going to have a little bit of a run here. I might be able to lock in some profit, and that was a mistake. Same with crypto. I was like, I'm going to buy this dip. And then it kept dipping, and it keeps dipping. Yeah, I did buy the Bitcoin dip. The first dip. No, sorry, the second dip. We're now on the fourth dip, and it just keeps dipping today. Fuck. It hurts. It hurts. House of Commons sucks. I don't disagree with that. Government's pretty horrible at doing anything. They're like the least efficient body for doing pretty much any task. Crypto, great to hear you have cash. Having the reserves to have the reservation to have cash like that to deploy is I was mostly deployed because I believe the long-term markets go up. So I didn't have a lot of cash. I wished I had more cash. Like, people who saying I'm buying dip. But if you're like me and I'm asset heavy, I'm pretty much deployed. There is no more buying. Like, what am I gonna buy the dip with? I gotta sell something to buy that dip on that stock, right? Like I gotta sell another stock to buy this dip. And in a perfectly balanced portfolio, which is what you want, by the way, guys, you want to own those indexes. You want to have good, wide market exposure to every sector. If you did that and you built a diversified portfolio, you can sell your oil stocks right now to buy the tech dip because your oil stocks are up or your Coca-Cola is up. Some of your value plays and your dividend stocks are doing well right now. They're way outperforming and kicking the index's ass when compared to the S&P 500, right? So they're in a real balanced portfolio. You can reallocate, and that's obviously something that you want to be looking at in these times, right? Is it's going to be very turbulent. So making sure you can survive is the most important thing. Nice to hear. Insufficient funds. I had a nice name. Added this morning into the crypto when they saw the dip. That's good. Obviously, don't bet more than you can afford to lose. And if you can hold it for the long term, I think 5 years from now, you'd be thankful that you bought Bitcoin or Ethereum, especially ETH today. ETH was like at 14% down, 30% on the week it was down. That's a big 7-day drop. There's really opportunity, a ton of opportunity there. I guess through mining, technically, I'm still dollar cost averaging into ETH and into crypto. So I still do have some exposures that way, but it's not enough. I wish I had more. Like, if you have a huge portfolio like I do, and I put like $50,000 in to buy the dip, it's fucking nothing. Like, yeah, I am buying the dip a little bit. If I get some cash and I see a really good value play, maybe I'll throw like 50,000 into Bitcoin or something, right? Like, whatever. That's nothing. It's a drop in the bucket compared to how much I'm losing on my equity portfolio. I live off my assets. I'm asset rich, income poor relative to my assets. Most people have not a lot of assets. They have like 100,000 in assets and they make like 50 grand a year. So they can make back, if they lost 50% of their portfolio, they can make that back in like 2 years. No big deal. It would take me a long time to make back if I were to lose my whole portfolio. Yeah. What about refinancing homes if you got a mortgage in 2020? Well, if you bought a mortgage in 2020 on a property, you bought a property and you got a mortgage on it, by now you're probably up 30, 40, 50%, even with the correction we've seen of 10% in real estate on average. That's a bit of a pullback scene. You're still up considerably. So yes, take as much cheap debt as you can. Ideally, you would have refinanced in January when you heard rates were going up and rates were still low. Like when you first heard the whispers and the inflation's high, you have to crank rates up. That's when you should have like refinanced when money was still cheap. It's still cheap now relative to where it's going. So especially variable stuff's pretty cheap right now. So you can get approved and financed. You have to ride the wave, but you can qualify for a lot more debt using variable rate mortgages here in Canada. They use a different qualifying rate on variable rate mortgages versus fixed. Fixed mortgages, they have a stress testing. You have to qualify like a 7% interest rate, which means that like it's very hard to qualify for anything right now. But yeah, I would definitely tap in any fixed debt you can. The nice thing about real estate debt is like, as long as you can sustain, as long as the cash flow of the property can sustain the mortgage payments, you get that money out and they can't call that debt on you. You could, like with stock debt, they can call it. It's called margin call. But on real estate, there's nothing they can do. You just keep making your payments and it's all good. There you go. If you're lucky enough to be a Scotia step person, you could refi and keep your rate and no issues and just add to it at the new rate. There you go. Borrow against your life insurance cash is an option as well. Life insurance has insane fees attached to it, so that kind of sucks. But I guess if you're already in the product, then yeah. How do I say this? When I used to review whole life insurance and universal life insurance products and run the total fees paid, the MERS and the upfront insurance fees, and compare that to an investment in an open account, because capital gains are taxed between 20 and 24%, right? It's the maximum tax you'll pay. And a lot of these advisors don't think about capital gains tax being half tax-free. So they just assume tax rate's 50% or something crazy, which is stupid because most agents are not smart. That's okay. That industry is full of crooks. Anyway, what I would find is that the fees of the insurance policy eat into your cash value such that the tax savings is almost always less than the cost of the fees, because they bake in a fee every year of 2 or 3% MER, management expense ratio, plus upfront they take most of your first year. Usually it works in a whole life or a universal life. The first year of premium you pay goes entirely to fees. to the agent and to the insurance company, et cetera, and so forth. So most insurance, you know, they call them these universal banking and infinite banking concepts. You'll hear those thrown around. For the most part, it's a load of crock, and you basically are accepting a 5% real return, which is shit. That's 50% worse than the index, and you're going to pay a ton of insurance. And statistically speaking, you're not going to die. So they win almost always. You only win with whole life and universal life insurance if you're in the maximum tax bracket, and you will continue to be in the maximum tax bracket, and you plan to never leave Canada and stay in that maximum tax bracket, and assuming you get a policy that has decent fee structure, and you're young enough that it makes sense to do it. There's so many ands, so many caveats that like probably 5% of people or less, it makes sense to do it. A lot of wealthy people, they think it makes sense. It doesn't make sense. It makes sense for the insurance company, it makes sense for the insurance agent, it makes sense for the financial advisor. It doesn't really make sense for you. They'll try to manipulate the equation so it makes it look like it makes sense for you. But anyway, I spent a great deal of time evaluating whole life and universal life insurance policies in my 4th year doing my finance degree at Ivy. I did a little special project on it, and I examined everyone from Freedom 55 to Sun Life to BMO, Scotia, all of them, and they're all shit. It doesn't make a whole lot of sense, primarily for the fact that the fees are greater than the tax savings. So you have to calculate those and decide for yourself. For someone like me who wants to retire in, say, Bahamas or end up in Costa Rica, or if you want to end up retiring somewhere on a lower income, like you plan not to be making $1 million a year in retirement and you're not going to be working, then the tax value when you need to draw that capital, not so great. Also, if you plan not to die before 50, again, the ROI is not so great. Inflation eats away at a lot of that real return. And so anyway, you eat a lot to fees. A little side tangent, but I want to throw that out there for those people looking into the whole life stuff. I also have a whole life policy that has a cash value, and I did it, just for in case something happens to me. It was also 50% on sale. They had an actuarial error in the policy that I bought. It's a pay 20, but I don't have to pay for 10. So it was a glitch. It was 50% off. And even still, the numbers were like, not amazing. But fuck it. I did a little policy. Just for investigative research purposes. And I can tell you it's not worth it. Okay. But maybe for you it is. Every situation is different. Run your numbers. Make sure you don't use a 54% tax rate, because capital gains are actually like 24% in reality. That's the maximum tax you're going to pay. And then also factor in all the fees and how much of that cash value is eaten up. And the opportunity cost on that money, had you invested all those at premiums in, say, a TFSA or even an open trade. Like a TFSA blows everything else out of the water, but an open account at 24% capital gains tax rate, run the two and see. So your whole life would have had fees. In year one, majority of what you paid would have went to fees as opposed to cash value. So if you're paying $10,000 a year in fees or $10,000 in premiums, they call it, on your policy, probably your cash value end of year one is like $1,000 or $2,000. So if you pay $10,000, $8,000 of that first year went to fees. So that $8,000 could have been invested, and by year 25, that $8,000 turns into $50,000. So you already have $50,000 in year one in future value. Then year two, same thing. You put $10,000 in, your cash value is probably like $5,000 now. So you've put $10,000, you put $20,000 into this policy so far, and your cash value is like $5,000. Year three, you've put $30,000 into this policy, $10,000 every year, and your cash value is probably like $12,000, right, or something like that. And over time, if you compare that cash value, the cash surrender value, to just investing those premiums into some sort of investment product, net of taxes, it's always better. 99.9% of the time, it's better to not have the whole life product. The only time you win over the long term is if in the investment account you assume like a 3% growth rate, which is like, who the fuck invests at 3%? The S&P 500 for the last 100 years has done like 11%. Anyway, but even if you ran at the same rate, net of fees, you're paying a 2.5% fee baked in on the growth of that cash value too. So you're losing your premium fees plus that investment in your cash value account that's invested with the insurance company. That's also, they're raking a fee on that. They're taking that. They're really making 9% on your money or 10%, and they're giving you 5%, right? So anyway, there's just a load of fees baked into that. It's only great if you die. So if you are worried about your family when you die, probably just get a term policy for the next 20 years and then invest the difference into an investment account. You'll probably be further ahead net of taxes. But anyway, what do I know? I was licensed. I'm not anymore. So no board, no one to talk shit about my videos and my blog posts. They didn't like that when I was licensed. They said I can't talk freely like that. I'm not allowed to do that. I would be killing the business in the industry. So anyway. I had to explain to my wife. $50 super chat. Sweet. William says, Mike, thank you for the advice on AMC. I covered yesterday after being short since the end of May last year. Much appreciated. AMC's probably been like, I haven't been watching the price, but I'm sure it's been shit. So like, that's been amazing that you've been shorting it as it comes down. In general, all the stocks right now are just, primarily in growth and tech and meme stocks, all that shit are getting hammered. Their valuations specifically are being hammered. People are like, we have to put our capital somewhere. Where do we put it? They're putting it into growth. They're putting it into value right now, into stable stuff, recurring utilities, et cetera, so forth. So those might be sectors to like maybe rotate out of a little bit into some growth. I think I have a growth mindset, but preservation of capital is obviously important. So be careful. Don't do it on debt. Don't do it on margin, William. But good to hear. That's amazing. I wish I'd stay on Newegg, from start to finish, because if I just shorted that from $70 down to $4 or $3 or wherever it's at these days, that'd been crazy. Doreen says, I'm from the Bahamas. When are you coming back? I'll probably be back in the fall to check it out again. Every winter I'll be down in Bahamas, Florida area. We'll be locking up a property, start planning things out. It takes me a long time to be ready to make a transition like that, especially with the family and everything. And now with the market being in a shitter, it's a great time for me to plan my exit return, to get out of Canada, potentially tax-free, and then all those gains I could have on the upside in a tax-free area. So there's, I do need to use up the losses that I have first. I'm gonna basically lock a lot of those in, and I can use those to offset any potentially gains. So yeah. Good to see you live again. Thanks, Elizabeth. Okay, I think I got all these questions answered for the most part. Let me scroll down. Tanner says, what's your plan with Bitcoin? I'm currently holding. If I had more cash to deploy, I'd buy more. I think MicroStrategy is a great way to get that exposure to Bitcoin without having to pay full price for Bitcoin, because I think the valuation of his company right now is like, if Bitcoin drops to like 19,000 or something, that's how bad it is. Next question. So Ali says, my name's Mike, not Mark, but I'll take it. I'm new to understanding how financial markets work. In your opinion, what is the best way to learn and make better investment decisions if you were to start? What path would you take? Just buy the indexes. Buy your VTI, your world indexes. Buy, maybe a little slice of the NASDAQ, which is like QQQ. Is a good ETF to follow. SPY has a lot of action on the options space as well, but I guess you're not going to, if you're just starting out, you're not going to be using options to buy the stocks. Just go in there and buy a basket of everything, especially stuff that's been beaten up. But if you own a collection of the whole market, you'll be okay. You buy one, VGRO is another one. If you own one stock like Amazon, you get fucked. If Amazon goes to zero, right? If you own just the FANG stocks as an example, you could get screwed. But if you own the entire market, in 10, 20 years, you'll be totally fine. Yeah. Only reason I'm not fully deployed is because Tfsa is maxed. Yeah, my Tfsa is fully deployed into 25% S&P 500 and 75% ETH and Bitcoin. So that's my Tfsa is screwed right now because I bought into Bitcoin, I don't know, January or February dip, which was still on sale, relative to where it was last year. But yeah, compared to where it is now, geez. But you know what? In the next 2-3 years, like by 2025, I'm sure Bitcoin will pass $100,000 USD. So whatever. Like I could put a couple $100,000 in now, and that'll probably double. So there's opportunity still. I need a buyer for my 6plex. I think I'm gonna throw it on MLS. I throw it out here like casually, but I might put it up on MLS. We have the 6th unit almost rented here shortly. It's bringing in like almost $100,000 a year in income, and the cost, the expenses on it are low. Property tax is like $300 something a month. under 400 bucks a month. The utility is like 500 bucks a month. A mortgage is like, at these rates, it's like 40 grand a year or something, right? So there's like potentially as much as a regular average person's job just having this sixplex, right? I should hold it, but my thoughts are that I could redeploy that cash in better places and make more. Like as an example, in Bitcoin, I think right now it's a better opportunity. Not as stable for sure, but I'm not looking for stability. Um, I have already, my base. I'm good. I'm looking for growth. Like I want to get to 100 million or a billion, right? I want to grow. Real estate's more of a place you can park it. It's safe, make solid, small cash flow. 40, 50 grand doesn't really change my life all that much. And plus, I need gunpowder right now. I feel like there's some real opportunities. So if you know anyone who's looking for a sixplex in the A+ area of London that wants to buy privately right now and get a bit discount if they don't have any commission involved, or if you're an agent watching this and you want to make 3% commission, just add it on top. Let's get it sold. I think I'm ready to sell it. Yeah, fully rented, turnkey. The property manager is going to stay on. She's amazing. She's an amazing property manager. The best one I've ever had, by far. Super communicative, very, amazing, affordable, just great quality, hard work ethic. She will go with the property. So like it's literally turnkey. You don't do anything. Yeah. How do you buy Bitcoin through your Tfsa? I must know. So Kyler, the way you would do that is you would expose yourself to like shares in MicroStrategy as an example, which are trading at like half of the Bitcoin holdings of MicroStrategy are trading right now at so the market value of the stock is trading at like half of the market value of the current Bitcoin the company literally holds. So you can buy Bitcoin at half off right now by buying MicroStrategy if you believe that MicroStrategy will survive this bear market in crypto. It's possible to get margin called in some of the debt that they have on their Bitcoin. But they've got hedges and shorts on it. Michael Saylor says he could survive to like 9,000 price, 5,000 price in Bitcoin, which could happen. Who knows? What we do know is that in the next 5 years, Bitcoin is going to hit 100,000 USD. That will happen. That's a fact. I know it's going to happen. I believe it with every fiber in my body. I don't know what the bottom will be. It could be $5,000 or $10,000. I think that's probably getting close to the bottom. But you could then own those shares, and as Bitcoin moves, basically the stock moves with it. As Bitcoin moves up, it moves a little bit better than Bitcoin. When it moves down, it moves a little bit worse than Bitcoin. It's more volatile than Bitcoin itself. But yeah, you can get those exposures. There's also ETFs that literally are like Bitcoin ETFs you can invest in, which I also have holding in my portfolio. So they hold the Bitcoin for you and give you that public exposure, and you can hold that tax-free. So I think long-term would be fine. Right now, the price is very affordable for a Bitcoin. I wish that I didn't buy as much Bitcoin as I did. I had a lot of Bitcoins at the peak, which is painful. I don't want to reveal how much Bitcoin I have, but definitely more than 10, a lot more than 10 Bitcoin. Yeah, so I'm feeling it. I'm feeling that drop. But I'm bullish long term, if it keeps dropping, like it's going to be cheap to buy like 100 Bitcoin. Like 100 Bitcoin at imagine if it gets down to like 15,000 a token USD, then or even 10,000 a token USD, right? 100 Bitcoin's like $1 million. That's nothing. That's not a lot of money to become a Bitcoin whale when it rips up. So demand says, I know it's a few years out, but how do you feel about travel and kids' schooling disruption? Well, in general, I think the schooling system sucks. My goal is to homeschool my kids, especially once my daughter, unless they want that social interaction, in which case I think there's better ways to achieve that same social interaction by joining clubs and creating communities. And there's so many ways that homeschooling people, like we could just go out to, every day she could have social, where she goes to like 2 or 3 things that are social in nature, and she could have her friends that she plays with and whatnot. But I think once you get the basic reading and writing blocks built, most of what you learn in high school is fucking useless for real life. I can't think of how I even use like basic trigonometry, vectors, and calculus. Most of what I studied in science too, like even physics. Like when did I ever use physics or even friggin' like advanced biology? When have I ever beyond the cell mobiles that I built and the intricate understandings of like how we digest food and shit? Like I could learn all that on Google if I wanted to go deep on that. But how much did that actually help my career in any way or my life in any way? Not at all. Like almost every course I took in high school was useless. So I'm thinking about unschooling and then homeschooling, or creating some sort of enriched program where I brought a tutor. Like I want to just hire a teacher and bring them on as like a full-time nanny slash teacher, but I want someone with a degree. Someone who wants that. If you know someone, by the way, who has a teacher's degree and can't find a job in the union and is smart and is open to, like there's programs you can buy, online programs that are very advanced. Your kids will be multiple years ahead of their grade. You can enrich the curriculum and things like I give them business books to read that would actually help them in life. How do you actually like build a business and manage a business, manage people, and the psychology behind that, all useful content that will actually help them in their life. That's what I want for my kids. But whatever they're interested in, if my daughter's interested in art, then hell, we'll build the best art program for her. It'll be customized as opposed to her having to take like vectors and calculus. And if she doesn't enjoy that, imagine struggling through that. And like French, as an example, like I took French all the way up, and it's like I never used that. I can sort of conversate, but like when have I ever used that? I don't know. Like it would have been cool if I took Spanish, to be honest. That would have been better than French. But anyway, yeah, I mean the travel, you've got to. I think the best way is to build a home in each place that you are. So build a home in the Bahamas, build a home in Florida, build a home in Costa Rica, build a home in Canada, whatever. And then when you go to each place, you've got a home, so to speak. So they know, like, imagine like this example. During the year, you live in your house, and a lot of Canadians, the Canadian dream, to go to the cottage for 3 months a year or 4 months a year. You go to the cottage, and it doesn't feel like their life's disrupted because their cottage feels like a second home. So you could set up a system when you went back and forth between, say, Canada and the Bahamas or Canada and Costa Rica. You could have homes in both places. So there are ways to build that. Yeah, so there are definitely, if you get reading, you get into it, and you start looking around at the options, there are definitely ways to architect a life that is more fulfilling, and you end up with kids that are better adjusted to the new world that we're going to be living in. So Adam said, how far into the future can tax loss harvesting be used to offset gains? It's a great question. I'm sure. I think indefinitely. I'm pretty sure you can carry them forward every year. So you can, in theory, because I'm actively stock trading, those are business losses. So I could start a lending business, as an example. It's something I'm thinking about doing. I could start a lending business, and if I charged appraisal fees, coaching fees, deal review fees, the actual interest on the deal, all of that active income would normally be taxed in the corp, and then again taxed on my personal hands, probably like 50%. So I could offset 50% of that tax in Canada. I now have like the next 2 years tax-free in Canada. So there's not really a huge incentive to leave until I've used up the tax-free vouchers of my losses that I can carry forward. So the recession actually is interesting. Everything happens. I try to believe that everything happens for a reason, and we do our best to navigate through everything. But I just have to believe that things happen as they should. And it at least makes me feel better about my life. And when bad things happen, I'm like, there's probably a reason for it. There's a parable that I heard on Instagram, and it was like, something bad happens to this guy, and he's like, I don't remember the story, but it's like something bad happens. And he's like, the whole village is like, oh, it's horrible that happened to you. And he's like, maybe. And then the next day, it turns out that thing that was bad that happened ended up saving his life. Like he missed his flight, and then you find out that flight crashed over the ocean, and you're like, oh, maybe missing that flight and having the worst day ever wasn't the worst day ever because I didn't die. And the next day, it's like, it's like the son or something breaks his leg, and they're like, that's horrible, your son broke his leg. And he's like, maybe. And the next day they come around and there's a war, and they come to recruit his son, and his son's life saved because he broke his leg. And so sometimes bad things happen so that better things can happen. Like maybe now out of the ashes, something better happens, right? This loss happened, and maybe I would have died on a plane, flying to the Bahamas or something next year. And now that won't happen because I have tax losses that I can harvest here, and I end up building a business here in Canada that makes me another $5-10 million, right? Sometimes bad things happen, and we think that, that thing is the end of the line, right? Like I'm down on the month $1.2 million on my stock portfolio, as someone just pointed out. I was getting close. I think that's in total when I'm down. I was almost back to break even. So I think I'm in total down 1.2 million. Maybe it's like 1.3 across my stock portfolio, which is like brutal. But then again, I have I'm actually only down like 16, 17%, I think, if you do my whole stock portfolio. It's not that bad. Come back from that, right? Like, yeah. My crypto portfolio, it's down a lot, like 30% or 40%. I don't even know. I have to look. I'm not even gonna look at that. I'm just gonna leave it. other than maybe some tax harvesting where I rebuy inside of my corp, yeah, I don't know. It's brutal. It's brutal. It's tough times, guys. Like losing 7 figures, it's not easy, but you got to remember that I have high income skills, so I know that I can come back. I get to do what Trump did when he went bankrupt and use all his losses to offset his future income. So my recovery is not so bad. Thanks, crypto. I don't know how you're not shaking after your loss of 1.2 million. Jeez. Yeah, I mean, I'm trying to stay calm and collected, but on the inside, I am destroyed. It's okay. It does ruin your day a little bit, though, to lose $1 million. James says, I agree with the custom home education. I feel like if you feed the interest of the child, they will get the maximum boost to the field they're passionate about, and everything can be learned ad hoc. Yes, especially if you, like, I can afford to hire, who knows, this crypto and stock dip keeps going, who knows? But I can afford to bring on someone full-time and enrich their education. And so I don't mind spending, say, 40 or 50 grand a year, plus whatever it costs me to house that person with us, to have someone that could enrich their education and enrich our lives in a lot of ways. So for me, it's something that I have no problem investing in my children. That's more important to me than investing in stuff or shit that I'm not going to use, right? So yeah. I'm excited for this winter though. I'll be spending every winter now for the foreseeable future. I'll be spending like 5 months a year probably in Florida, Bahamas. When my tax credits run out in Canada, I'll probably leave Canada and do the reverse, and not be a tax resident, but we'll see. We'll see how things play out. I don't know what that date will be. It could be next year, it could be the year after. It kind of just depends on a number of factors coalescing and coming together. Yeah, I have connections to mortgage brokers. Just send me a message. I can send you a few. You can also go on ratespy.com, and they have some lenders that advertise some insanely cheap rates on there, and you could reach out to a few of those prospective lenders and get some dirty cheap rates, especially if you're an owner-occupied. I think I got all the questions, but if I missed one, just shoot it in the comments and I'll get it next time. Yeah, I'm scrolling here. Yeah, I think I got all the stuff. Anyway, the super chat was really awesome. $50, that's sweet. On a day like today, that's it helps. It's a drop in the bucket, but it does help. It helps boost the mood. So thank you for that support. The channel has no ads, so I choose not to monetize it, though I might have to. You know what, guys? Like, starting tomorrow, I have to put like one ad at the start of every video so we can make a penny every time someone views it, so I can start buying the dip, because pretty much deployed right now. I need to buy some crypto and some stocks. Maybe I'll turn it on. No, I probably won't. We'll see. I'll think about it. I think I got all this stuff covered here. Thoughts on... I think I got all this stuff, yeah. Are we headed for a housing crash? I don't know. I think I would take some profit and refinance now. Real estate doesn't perform all that well in high interest rate environments. The cap rates no longer make sense. The same way stocks like growth and tech stocks, valuations come down. Yeah, 5 likes. What the hell, guys? We've got like 100 people jumping in and out of this stream. Hit that freaking like button, please. I'm having a hard day today. Just hit the like button. That's all I'm asking. Yes, but valuations will come down. You can't borrow at 4% or 5%. In the US, it's like 5% to borrow right now, 6% to borrow. And there's properties in like New York, LA, Miami, all the major cities, they're selling at 4 cap. So when you're borrowing at 6% to buy properties that are selling at 4 cap, you lose 50% on every dollar you borrow. So there's no point in mortgaging. It's only cash buyers at that point. And why wouldn't they just lend mortgages at 6, 7% in the first secure position that's safer than being the equity in a property at 100% loan to value, right? So it's actually, the paradigm has to shift, and it no longer makes sense to buy real estate at 4 cap. So rents have to come up, or cap rates have to come up, and therefore prices would have to fall, or interest rates have to correct. So something has to give. Right now, the prices should come down a little bit. We should see that. We're in a recession. So yeah, I'm a little bearish, but if you got good cash flow in your properties, you could hold them. 5, 10 years from now, you'll be way up. So don't try to time the market. All right, everyone. Thank you so much for watching. We'll see you next week, and always at Mike Rosehart on Instagram and Mike Rosehart on Facebook. Thank you so much for watching. And remember, the secret to unlocking a wealthier you: spend less, earn more, and maximize returns on the difference. Good night, everyone. See you next week.